Al, thank you for joining me.
Erik, it's a pleasure to be here. Thank you.
You have big plans to expand Visa's business in Africa. Tell me about them.
Well, this is one of the most exciting places in the world, and we believe that it has only really begun. There's been so much progress in the last couple of years, the last 5 years, but the progress that I see and the possibilities I see for the next decade are incredible. We've been here for 50 years. We do business in all 54 countries in Africa. We opened up our first office in Johannesburg in 1992. Last year, I opened up our 10th office in Kinshasa in the DRC. We opened up our first innovation center in the continent in Nairobi last year. And we have an office here in Morocco in Casablanca. I announced at the U.S. Africa Business Summit in December in Washington that we would commit $1 billion of investment into Africa in the next 5 years. I hope it's more. And as part of that investment today, we're announcing a Visa Fintech Accelerator program. Fintechs are so important in this market. There's a lot of bright young people. And what we're going to do is commit to work with 40 startups a year for the next 5 years. And we'll ultimately each year pick about a third of them and spend numbers of months with them on both training and education and skill building, but also we'll invest capital in them as well. So we're very, very excited about that because a lot of these fintechs are just adding tremendous value to the payments ecosystem.
So some of the $1 billion is the capital that's going into these fintech startups. Where's the rest of it going, and why are you hopeful that it could be more?
Well, I think we'll continue to look to expand here. I think that I wouldn't be surprised if at this conference in 5 years we're in another 10 markets in terms of offices. I think we'll commit to bringing a lot of innovation to this marketplace. Many of the things that we've learned globally around the world can be applied and brought into this market. And then we're continuing to build out the payments world is an ecosystem. No one company can do it all by themselves. So we're going to continue to look for ways to build the number of partnerships we have and the level of collaboration that we have with people in those partnerships. So I think in general, it's going to be a combination of people, of various solutions and capabilities that we'll bring to the market, as well as working with clients on new forms of innovation.
Al, in principle, Visa could have, at any point in the 50 years that you've been doing business in Africa, chosen to undertake the kind of expansion that you're undertaking now, but didn't. Why Africa now?
Well, I think now you look at Africa and you say, wow, it's exciting, it's young, it's a country where we're going to have the first digital native generation coming up. The people who grew up in the digital world who are out there looking for jobs now, they're looking for places to live, they're looking to get credit in their first credit cards. It's also a marketplace that has finally started to make, and this was the very first session yesterday, and it was apropos that it was because infrastructure is so critical. So in 2009, only 9% of people in Africa had access to the internet. It's grown now to 40%. Yet, as much as that is fantastic growth, the average country in the world is at 62.5%. So there's still a lot of room to grow. But by 2025, we think there'll be 650 smartphones in Africa. Smartphones are a critical form factor. We think by 2025, 500 million people will be shopping on e-commerce. That's another sign of digital expansion. And one of the things we know from several sources, including the World Bank, Erik, that as you increase mobile penetration and financial access, that you boost GDP by as many as three points. And I think, therefore, there's lots and lots of opportunity here. So this is a time and place where I think the infrastructure has advanced. It still has ways to go, but it has advanced that it creates a good on-ramp for us. And we heard yesterday from the Secretary General of AFCFTA. I think that is a critically important platform. This idea of taking a pan-African approach is critical for companies like ours to invest, because we can count, what we're trying to count on is having a level of standardization and interoperability across the continent that makes it easier for us to invest in a broad-based way, as opposed to having to create bespoke solutions in 54 different countries.
So there's a technological inflection point and a diplomatic inflection point.
I think both are true, absolutely.
Let's talk about fintechs. There are thousands and thousands of fintechs here in Africa, but of course, unlike in the United States or Europe or perhaps Australia, they're not trying to disrupt the banking or payments establishment, because in many of these countries, there is no banking or payments establishment. In fact, even here in Morocco, one of the most developed countries on the continent, under half the adult population has a bank account. Is it fair to say that the dream here, Al, is to build a cashless, fully digital financial services industry that is, many times cheaper and more inclusive than the systems that we know in advanced economies?
Yeah, absolutely. I mean, two-thirds of sub-Saharan Africa is without access to the financial mainstream. So the upside is fantastic. This is a continent that is going to jump past one of the big evolutions in payments, which is actually physical cards. This is a marketplace.
It's going to be the leapfrog moment.
It's going to leapfrog. It's going to leapfrog that. It's going to be a market where it's going to be mobile first as the entry ramp into the financial mainstream. And what's happening is a lot of the fintechs and the mobile operators, more so than even some of the financial institutions, are driving new capabilities that are in fact going to enable more digitization. I think that, and it's not only important for the local domestic African citizen, but I was talking to the Moroccan Minister of Tourism on Monday in Rabat, and tourism is super important to many of the 54 countries on the continent, and tourists don't come with cash. And the reality is that to the degree that tourists have more ability to utilize digital payments is only going to make tourism more popular here, and it's going to uplift the local artisans and local shops who are going to be able to have more people have a form of accepted payment that they can utilize, because they'll have a Visa card with them.
The digital payment systems that are evolving in Africa, the first, of course, or at least the first mobile money solution in Africa was M-Pesa in Kenya, and quite famously transformed financial services in that country. They're largely domestic. Right? It's almost every country requires a bespoke solution. So where does Visa fit into the equation?
Well, given the fact that we operate in every country and territory in the world, with the exception of the 6 countries that the U.S. has sanctions on that prohibit us from access, I mean, we connect the world. We have 10 million miles of fiber optic cable. We have
10 million miles.
10 million miles. We have 4 redundant, fully synchronized data centers around the world. We have 3 follow the sun cyber fusion centers to work on protecting the security of the ecosystem. So the cross-border movement of funds, whether it's for payments or for anything else, including P2P payments, which have become a very big application in many parts of the world and in some countries here on the continent of Africa. That is that's really a bread and butter expertise that we can help create that interoperability from one nation to another nation. And we can ensure that if you spend on a Visa card from a bank in the United States today in a market in Marrakesh this afternoon, that the right foreign exchange will happen, you'll get the proper amount on your bill, you'll get the good you're supposed to get, and the merchant will get paid properly sometime tomorrow morning.
Forecasts suggest that the growth of the payments industry in Africa is not going to be universal. It's going to be highly concentrated in a number of countries: French West Africa, Egypt, Ghana, Kenya, Morocco, Nigeria, South Africa, Tanzania, and Uganda top the list. Which countries look most promising to you?
Well, I think there's even a hierarchy in the ones you said. Right now, I would say that Egypt, Kenya, Nigeria, and South Africa are out ahead of the other nations that you talked about. But I mentioned my visit to the DRC, and I've had two follow-up conversations with the president of the DRC. I mean, Kentesa is very interested in moving ahead and trying to digitize much of the DRC. Government leadership here is critical. It really is. And government setting an example. So in Egypt and South Africa, for instance, the governments worked with us to electronically distribute emergency funds during COVID to over 10 million people in each of those countries. In Kenya, we're digitizing the parks. So access to the parks doesn't have to happen with cash. In a number of countries in Africa, we're helping create a situation where you can pay your taxes online. You know, an example outside of Africa that's interested is in Bangladesh, in the cattle markets, which until last year were totally cash. They went digital this year, and there was $100 million worth of cattle sales that went digital that in prior years would have been cash. So when governments lean in and set an example by making sure that government subsidies are digital, it also has other advantages, right? It creates a more transparency about where money is being spent. It also creates a situation where, frankly, it takes out some of the gray economy, which is something that many governments are trying to achieve.
Very much so. Al, there are no shortage of obstacles to doing business in Africa. We've talked about them here on the stage. A few noteworthy examples: political instability, rule of law, corruption in some cases. Before Visa opens an office and chooses to either locate staff or hire locally, what conditions do you require?
Well, I think we want a somewhat favorable and welcoming government and regulatory environment, but we also critically will look at infrastructure. Of the 25 least connected countries in the world, 21 of them are in Africa. We estimate that 300 million Africans live 50 kilometers or more from a fiber or cable broadband endpoint. So it is critical to us that, what I was talking about earlier, that there's been so much advancement, there's still so much to do. We need the countries to be far enough along that we're not kind of looking at an opportunity that's quite small. We recognize that in anywhere we go, we're going to have to make sure that we're working closely with the government and cable providers and educators and everybody else on the things that are required. But the country has to be far enough along in the building out of that infrastructure for it to be attractive.
Sense.
It has to make sense, exactly. We're in business, it has to make sense.
What are the biggest risks you have to manage operating here?
Well, I think you want to make sure that whenever you manage a global company like we have, you want to make sure that you're investing smartly. You don't want to apply a peanut butter approach across the world to how you invest. And the reality is that in certain years, we will make decisions to overinvest in certain markets, and that might mean we lose money in those markets over the course of a few years. But we do that because we think that the medium to longer term ability to build the business is strong. You also look. I think any senior leader, certainly when I was CEO of Visa, now as executive chairman, you worry about cybersecurity, right? You have to. Any CEO ought to be paranoid. If you run into a CEO who's not paranoid, then they're not worrying enough. I think that regulation is something that I personally spend a lot of time on. I mean, sometimes, the key to scaling is you have to have good value, you have to have global standards and adopt them, and you have to promote interoperability. And so all of those things are critically important to scaling. And by the way, scaling's happening at an incredible pace. It's mind-boggling what's happened. It took Uber 70 months to get to 100 million users, Spotify 55 months, Instagram got to 100 million users in 30 months, TikTok got to 100 million users in 9 months, and ChatGPT got to 100 million users in 2 months, 1 million in 5 days. So the ability for platforms to scale like that, though, is a combination of those three things: value, global standards, and clear interoperability.
I know your expansion here is not a short-term play. How long do you figure before Visa's business on this continent accounts for a meaningful share of the company's growth?
Oh, I think probably a decade.
Long?
I think so. I mean, we'll see. And I think that's both a combination of absolute issues as well as relative issues. I mean, in general, 47% or so of our business is still in the United States. So certainly over the course of time, we don't want the United States business to shrink. So we want the United States business to continue to grow, but while overseas business grows as well. I think that, first benchmark would be to see our business kind of be 60-40. But what I say about Africa is that we're going to invest heavily over the next 5 years, so that in essence, over the decade after that, this starts to become a very meaningful piece of our business.
There are globally a number of trends in motion that appear to pose a threat to businesses like yours and others. There is, whatever you want to call it, deglobalization, decoupling, de-risking. There is the movement toward data localization. There's even technological nationalism. How are you thinking through those issues?
Those are all true. The payments ecosystem is extraordinarily interesting. As I say to the people at Visa, you're blessed to come to work every day, to work in a business where we think every day about how to grow the pie. Most businesses, if you actually sit back and think about it, have kind of a set pie that you're fighting with competitors over, and you're elbowing them to find the next 10 basis points of share. I spend virtually all my time thinking about growing the pie. And when you have a business like that, the world isn't going to sit there and say, well, let's just let the players who are in that world play. They're going to want to get involved and see what they can do and see if they can make money in that space. That's why it's space that's so attractive to fintechs. And as you said earlier, Erik, some of those fintechs are trying to disrupt us, but many of them are additive. Many of them are extremely helpful. I mean, digital banks have been critical enablers to bring people into play. Payment facilitators like Square and Stripe have lit up e-commerce and small vendors around the world to allow them to accept digital payments. All of that is extraordinarily helpful and exciting. But there is some, in my opinion, misplaced strategies that are heavily promoted by nationalism, or actually flow from nationalism. I happen to think data localization is terrible public policy.
This, of course, is the requirement that data generated in a country reside in that country, right?
Right. So, first of all, the more data you have, the better and the more discriminating we can be relative to risk of a transaction, the more discriminating we can be as to whether a transaction is fraud or not fraud. Just plain and simple, the bigger the data set, the more you can do. We can also all of our artificial intelligence, machine language, which is stuff we've been doing for 25 years, just gets better and better. But security is much better. If I have to build a data center in a market, first of all, that is a further level of investment I have to make, which goes into the calculus of whether I go in that market versus a market where I don't have to comply with data localization. And you can't just build one data center, you got to build two so that you have redundancy. And then you could never, ever have the same level of cyber defense in a small data center that you build in one isolated country than you would in consolidated data centers like the 4 very robust, very state-of-the-art global data centers that we have. So those are things that I worry about. A lot of what I do in my job is spend time talking to government leaders and regulators and try to educate them, try to make sure that they're thinking about things from all sides, and you do the best you can. I find that most regulators are actually very logical people. They're out for doing what they think is best for their country, and you can generally get to a good place.
Would you say nationalism poses the biggest threat to your business?
Well, I think everybody should be proud of where they come from and where they live, but I think that
that's patriotism.
Yeah, it's patriotism. The reality is, I think that the world is shrinking, and if this young woman that we do business with Naoli, that I visited in the markets yesterday, can open up the world to 500 artisans who just have a little shop in Medina, then that's what countries should look for. Part of nationalism should be what's best for the people in the nation, and I think having a bit of a focus that's more than just the borders of your country is the right way to go.
Very quickly, because we've technically run out of time. 3 quick questions that I know people here will value your answers to. They have to do with the macroeconomy, and of course, few companies can measure the pulse of the economy like Visa. Yesterday, as you know, Al, U.S. inflation slowed to 4%. It's a 2-year low. Does it feel to you like the world is finally escaping the post-COVID inflationary cycle?
Well, it differs around the world, but I think so. It'll be interesting to see what the Fed does this afternoon, and I hope they don't raise rates 25 basis points. We'll see what happens.
What do you think they will do?
I'm going to guess they do, but I hope they don't.
Oh. And how about the pace of growth globally? Does it feel recessionary to you?
No, the consumer's been incredibly resilient. It's amazing. Now, there's some trade downs where people are moving from brands to generics. I was recently talking to one of the CEO of one of the huge retailers, global retailers, last week, who said, that if people were spending $100 before, they're still spending 100, maybe 110. It's just that the discretionary items, the non-discretionary items are more expensive, so they might be spending a little less on discretionary items, but in general, the consumer is still outspending, and I think a lot of that, Erik, has to do with employment levels have still been pretty good around the world, and I personally believe that's a very important economic statistic, and if people have a job, they're going to feel more confident about going out to spend.
They certainly will. Ladies and gentlemen, please join me in thanking Al Kelly.
Thank you.